Let's start off with a quick review of last week's market performance and then touch on your outlook for the week ahead.
Well, as you rightly mentioned earlier, Alicia, the market actually closed higher last week by about 103 basis points on the week. Much of the trades were actually driven by some banking sector stocks, like you rightly mentioned, announcements of MOUs and likely mergers in the weeks and months ahead. Also, however, we actually noticed some profit taking in some stocks that investors had earlier taken position in. All in all, we still see a bit of volatility in the market, although the market closed on the positive territory. However, we expect the positive profit taking from investors to continue the week ahead. Obviously, the stability that was expected to follow the general election in April is actually, the effect of that is trickling in a little bit slower than the market expected. However, overall, we expect positive sentiments to pervade in the market in the weeks ahead.
What are you making of the pace of the announcement of recapitalization endeavours within the banking space specifically? Of course, as you touched on and as I highlighted earlier, the most recent of those being between First City Monument Bank and Finbank.
Well, the announcement of the MOU, I expect, would be a positive one for both parties. On the side of Finbank, it's a fantastic opportunity for that bank to be recapitalized and for investors at the end of the day to have some value for money, and also for depositors funds in that bank for them to not have to go and queue up at NDIC at the end of the day. On the side of First City Monument Bank, FCMB, it's actually a good takeover for them to make inroads into the northern parts of the country. If you recall, the Finbank we're talking about is actually a merger between First Inland Bank, previous First Inland Bank, and Inland Bank of Nigeria prior to the recapitalization of the banking sector in 2004-2005. So all in all, I think it's a win-win situation for both parties. However, this is just an MOU. We'll still have to battle with issues about valuations and so on and so forth. And we hope that it doesn't end up like the First Bank Oceanic MOU, where things fell apart when it came to the point of valuation.
Is the process happening fast enough in your books?
Can you repeat that, please? Is
the process, the entire recapitalization process, happening fast enough in your books? Of course, we had Central Bank Governor Lamido Sanusi last week saying that all of the systematically important banks will be recapitalized. The question is that process happening fast enough?
Well, there's no question about speed when it comes to mergers or takeovers. Whilst we all agree that these things have to happen, however, things have to be done properly and appropriately. Don't forget that in these banks, you still have some aggrieved shareholders who have gone to court to actually stall the process. So we do not expect things to be done in such a haste that would actually compromise the whole transaction or the whole process at the end of the day, which is why we have actually advocated that we will actually see some level of moral suasion and regulatory suasion on the side of central bank, which indeed the central bank is doing as we speak. So all in all, I think there will be a level of forbearance from the regulators and from the federal government to ensure that things are done appropriately, and to make sure that all aggrieved parties come to the table and come to a mutually workable solution.
In the meantime, we've got results keeping things ticking in other sectors, and looking at the cement sector specifically, Lafarge out with numbers, turnover surprising to the upside, and the company saying that being driven by strong volume sales, which were up 23%, but profitability still remaining a challenge. So that translation into a top line or bottom line growth still not filtering through, Tola.
Well, indeed, which is actually interesting looking at the Lafarge results. We compare that with Dangote Cement results, which actually saw Dangote Cement report about 9% increase in revenues and about 14% increase in profits after tax. At the end of the day, that translated to about 50% PAT margin compared to a much lower profit margin by Lafarge. And also, if you look at the return on equity, Dangote Cement's return on equity, from our estimates, comes to about 50% on an annualized basis, compared to Lafarge's also much lower, I think about 16% return on equity. So obviously, Dangote is doing something right that Lafarge is not doing. Surprisingly, anyway, we actually found out that the price of Dangote Cement actually closed lower by about 1.81% on the week, whilst Lafarge obviously closed higher, which actually indicates some level of imbalance in market. Also, if you want to look at valuations, like I mentioned earlier, Dangote Cement is trading on a forward PE of about 7.9, which is probably one of the lowest in that sector, and making it a buy. So that's it for the sector.
Yeah.
Our pick for that sector will most likely be Dangote Cement.